Many governments have committed to net zero targets, and the concerns about energy security have increased the pressure on governments to speed up this energy transition. A dramatic shift is required in order to meet these targets, and the resource requirements to build up this infrastructure is enormous. Up to now, the biggest focus for investors has been on the energy producers, but this immense resource demand for metals and minerals, coupled with the lack of development of new mines over the last years, could put the mining industry in the spotlight now. In today's video, I'll dive into the origins and the evolution of a commodity supercycle. I'll examine whether we are on the verge of entering one or perhaps are already in the midst of it. And of course, I will provide concrete investment tips on how to best capitalize on this trend, including one bonus stock. So sit back, relax, and get ready for an information-packed video as I spend a huge amount of time researching this. My name is Florian. Welcome to Cashflow Maniac. First of all, let's define what even is a supercycle. The term supercycle basically describes a sustained period of economic expansion and growth in a particular industry or market driven by a major shift in the economy or the way we live. And while regular economic cycles can vary in length, but on average last about 5.5 years, a supercycle can last much longer. It can last many years or even decades, depending on the trend that is driving this cycle. Over the last century, we saw 4 supercycles. One was driven by the US industrialization and World War I. The second one lasted from the build-up of World War II until the rebuilding after World War II. The third one was the reindustrialization of Europe and Japan from the 70s until the 80s. And the last supercycle that we saw was actually the rise of China from the start of the 2000s until roughly 2013-14. So all 4 of these supercycles were driven by major historical shifts and accompanied with a huge productivity and resource demand of certain industries. The resources required during a supercycle depend on the kind of supercycle and the shifts driving this specific supercycle. In general, this includes many industrial metals like iron ore, copper, or aluminium, and is accompanied also by a huge demand of energy to drive this production. And in this case, this includes commodities like oil, coal, or gas. So with this definition of a supercycle, I'd argue that with the current energy revolution, we do have such a historical trend shift and that a supercycle is already underway. This current shift is happening on 2 major fronts: the energy transition to renewables and the shift to electrical vehicles. Both of them have vastly different requirements compared to traditional technologies. For example, to replace a coal power plant with wind, it requires roughly 6 times more the amount of minerals like copper, zinc, or nickel. For a gas plant, it's even 30 times more. Building a solar capacity is less resource intensive, but it still requires roughly 3 times more minerals compared to a coal plant. The transition to EVs shows a similar pattern. Compared to a conventional car, EVs require about 6 times as many minerals, namely lithium, nickel, cobalt, and manganese. But material intensity is not the only factor. What is also crucial for the commodity demand is the speed of this transition. In addition to this, we see 3 more factors that are driving the current demand for resources. First of all, we have the globalization. When poor people become wealthier, they generally increase their consumption in various areas. This starts with higher calorie intake, greater energy uses, both in terms of electricity but also fuel, and the demand for higher quality building materials. The second factor is the devaluation of currencies. In the recent years, many developed economies have experienced concerning levels of consumption and borrowing accompanied by higher inflation rates compared to the last 2 decades. And as the currencies lose purchasing power, the nominal prices of commodities tend to rise. And last but not least, the third factor is that the resource industry is very capex heavy. And the assets or mines are depleted over time. It takes several years or even decades to react on the rising demand with new exploration, developing new mines, and increasing the production. During this time, the production is limited, which also drives the price. Overall, we can say that the demand is rising while the supply is constrained and currencies are weakening. And because of this, I believe that we are currently in a super cycle and securely a bull market for resources and precious metals. And I also think that this will stay this way for the next couple of years. So in order to understand this limited supply a bit better and to already get a rough idea in what kind of company we want to invest in, let's have a look at the development stages and the lifetime of a successful mining company. And in this graph, we can see on the x-axis the timeline and on the y-axis the expected stock price. The life of such a mine starts with the discovery of the deposit. This is usually done by exploration companies, and these are just looking for the resource deposit in order to sell them later. In this state, we don't yet know if it is even feasible to mine these minerals, how hard it will be, how big the percentage of the wanted mineral is compared to the rest of the rock, and in general, if it's economically feasible to begin mining this deposit or not. This is proven in the second phase of exploration. In this case, the economic studies begin, and it is estimated how much of a certain resource is lying in such a deposit, how big the grade of the resource is, that means the percentage of the resource compared to the rock, and also things like infrastructure necessary in order to get to the mine, in order to get the resources out of the ground, what kind of mine is necessary, can we build an open mine or do we need to go underground, and so on. As soon as this economic viability is shown, these mines are usually acquired by bigger mining corporations or producers. And they then begin the construction of the infrastructure and the mine itself. Usually during this time some problems or delays happen, which can also affect the stock price again. And as soon as these problems are resolved, we begin the regular production of a mine. So the biggest gains can actually be earned when investing in such an exploration company. But of course, in this case, the risks are also very high. And here we have a plethora of risks. There are exploration risks, commodity risks, financial risks, geological risks, permitting risks, metallurgical risks, country risks, and this one is a big one because many of these deposits are actually in development countries. We have operational risks and we have infrastructure risks. So from 500 to 1,000 of these explorations, only 100 go to the second stage of exploration, and only 10 of these projects will be developed, which only results in one mine. That means there is a success rate of 0.1%. And this one is an optimistic estimation. I saw other studies that estimated that around 5,000 explorations are necessary in order to get one mine in the end. So the numbers vary quite a bit in this case. But still, it is safe to say that from all these explorations, only a very minor part will end up being a productive mine in the end and start generating money. As a concrete example, let's have a look at copper, because this one is a major metal necessary for all these new trends, so the industry demand will definitely increase. And for copper, all easily accessible and resource-rich mines have already been developed or even depleted, and the grade of the remaining copper is decreasing since decades, while new mines have not been developed in the last 10 years. That means that the production is going down while the cost of production is actually going up. Funnily enough, the climate change also affects the copper mine, as we can see in Chile's overall copper output that has been affected by a long-running drought in the country, or by concerns with Zambia's copper production that is also affected by droughts that created a power crisis. This might also affect the further development of new mines. And as I just said, many of these mines are also located in politically unstable countries, which brings a whole new list of risks for each individual mine. These risks are just increased by the fact that 20 mines are responsible for more than 40% of the overall copper production. So, in a nutshell, the copper demand is increasing with around 4% per year, while the short to mid-term supply will decrease. To explore and develop new mines, huge capex will be necessary that should keep the price for copper at a high level and in return provide nice cash flows for the miners. By the way, if you want to dive even deeper into these topics, I put a bunch of links to some of my research in the description. There is an old saying: the best cure for high prices is high prices. And this is especially true in a commodity cycle, where these high prices are necessary in order to get the capex to developed new mines. And in case of copper, this is especially true as just a couple of days ago, we got new all-time highs for copper and are still trading very close to these highs. Of course, as with every investment thesis, we should also look at the risks involved. And for this specific investment thesis, I identified 3 major risks. First of all is that the energy transition will crash. And that might sound very unlikely, but the shift to renewables is mostly driven by Western countries. In the meanwhile, China, for example, is still building up new coal plants. So if the material prices for this energy transitions are too expensive, or if the materials are not available as easily as expected, or even if there is a new energy source found, this will definitely crash this investment thesis. A second risk, and this one is for copper specifically, is that if a new replacement material for copper is found, something like a special superconductor, for example, or so, that can be produced in huge quantities at a reasonable cost. And in this case, I think it is even more unlikely that this will happen in the next decades, especially on an economic feasible scale. Last but not least, with this supercycle lasting at least a decade or probably even longer, and with the recent advancement in space exploration, I think that there is also a small risk that space mining actually becomes technically feasible. But of course, to replace the metals and minerals mined on Earth, it also needs to be economically feasible. And for this to happen, I definitely think that the risk is rather low. So guys, I put many hours of research into this video and watched and listened to many podcasts and interviews with industry experts to hear what they have to say about this topic. That is not an easy task while also working a full-time job. So it would really make my day if you drop a like or even subscribe to the channel. So now that we know that a supercycle is most likely happening, let's have a look at a couple of mature mining companies that can benefit from this trend. I'm only looking at mature mining companies, not explorers, in order to avoid all these risks that explorers have and can still benefit from the increased material prices over the next years. And as a disclaimer here, this list is a bit arbitrary as I didn't analyze all these companies in detail yet. But here we have sorted by market cap from big to small: BHP Group Limited, Rio Tinto, Southern Copper Corporation, Glencore, Freeport-McMoRan, and Whale. And if you compare the total return of these companies to also include the dividend payments, we have a clear winner over the last year, which is Southern Copper Corporation, SCCO. SCCO and also Freeport-McMoRan did outperform the rest by quite a bit. The performance of the S&P 500 in the same time frame was around 28.5%, so only these two companies could outperform the S&P 500 in the last year. Over the last 5 years, we have a similar picture. Here we have again the winners, Southern Copper Corporation and Freeport-McMoRan. The performance of the S&P 500 over the last 5 years was around 100%. So in this case, again, we have 3 companies that could outperform the S&P 500, including Glencore, but BHP, Rio Tinto and Whale did underperform the S&P 500 by quite a bit. Over the last 10 years, the picture is changing a little bit. Here we see the clear winner Southern Copper Corporation and Rio Tinto with 450% returns or 190% respectively. The S&P 500 in this time frame had a performance of 230%. So over the last 10 years, we only have one of these companies that could beat the index. But what exactly are these companies and what is the difference between them? The first one, BHP Group Limited, is the biggest one by market cap and has a market cap of 155 billion US dollars at the moment with around 50,000 employees. They are mostly focusing on mining the raw copper, iron ore and nickel. Rio Tinto has the ticker symbol of RIO and a market cap of around 125 billion US dollars and also a bit more than 50,000 employees. In their case, they are producing a couple of different minerals and metals, mostly focusing on iron ore, copper, aluminium and lithium. But they also have a bunch of byproducts like borates, ferrous metallics, diamonds, scandium and titanium dioxide. The Southern Copper Corporation has the ticker symbol of SCCO and they have a market cap of around 90 billion US dollars with an employee count of around 16,000. In their case, as the name already suggests, they are mostly focusing on copper and the byproducts like molybdenum, silver and zinc. Glencore has the ticker symbol of GLNCY, and they have a market cap of around 75 billion US dollars and a bit more than 80,000 employees. Their business is a little bit different compared to the other ones in that they are not only producing the metals and minerals, but they are also working as a marketplace for third parties. Mostly, they are also focusing on copper, cobalt, nickel, zinc and lead, and ferroalloys. But they are not only mining these metals, they are also a major player in the recycling of especially copper and other precious metals or other metal-containing products like lithium-ion batteries and so on. So their business model goes beyond just mining of these minerals. After Glencore, we have Freeport-McMoRan with the ticker symbol of SCX and a market cap of also around 64 billion US dollars and around 27,000 employees. And similar to the Southern Copper Corporation, Freeport-McMoRan is also focusing mostly on copper. Last but not least, we have Whale with the ticker symbol Whale, market cap of 55 billion US dollars, and apparently Seeking Alpha doesn't know the employees here. Around 65,000 employees. In case of Whale, they are mostly focusing on iron ore and pellets, nickel, and also copper. So while most of these companies are quite similar, there are certain differences. And in case you want to invest in this area, you should definitely check the details of each of these companies in order to understand their business model and how they fit exactly into this super cycle. I don't want to go into too much detail here, but let's just briefly compare the valuation of these companies. And for these multiples, we can find by far the highest valuation with Freeport-McMoRan and the Southern Copper Corporation. In this case, the PE valuations, as well as EV to EBITDA and price to cash flow, is quite a bit higher compared to the rest of the peer group. One of the absolute experts in this area and the founder and CEO of the Earth Resource Investment Group, Joachim Berlenbach, actually suggests to not invest in an individual metal or individual company, but rather invest in a basket of different products. For example, he suggests the investment of a physical commodity ETF here. But he also warns of the risks of the cyclicality and the volatility in this commodity sector. So an investment in this area is never a fire and forget type of investment, but it has to be monitored. The trends in the industry have to be monitored, and you should always check if the current cycle is still going on or if it's nearing its end. If you want to dive deeper, again, I would highly suggest checking out his webpage. The link will be down in the description. If you want to have some examples of commodity ETFs in this area, here are the 8 best commodity ETFs suggested by the Forbes magazine in May of 2024. Honestly, in this case, I would not go into very specialized ETFs like the Gold Trust or the Oil Fund, but I would rather choose one broader commodity ETF, like for example these 2 commodity index ETFs. In my research, I also found a couple of ETFs that are specifically targeted on these commodities that are expected to produce the highest returns in this current supercycle. In the beginning, I also promised you one bonus stock. And as Peter Lynch said, during a gold rush, most miners lost money, but people who sold them the picks and the shovels made a nice profit. So what could be a better company than literally a shovel salesman? And of course, I am talking about Caterpillar. The machines of Cat have already been shown in a couple of the promotional slides of the mining companies, which already shows us that these products are vastly used in this industry. And they are providing a vast array of different products specifically designed for this mining industry. I will not go into too much detail here, but if you want to see a full stock analysis of CAT or any of the miners that I showed today, please let me know down in the comment section. I'll definitely consider doing a video with a full stock analysis for any of these companies. So to sum it up, the demand for commodities is rising and copper prices are already hitting new highs. Big economic changes like the move to renewable energy The switch from regular cars to EVs and the growing need for data centers to support AI are likely to keep the prices up. This is especially true since supply isn't keeping up with the demand and is even decreasing in some cases. Since it takes 10 to even 15 years to explore and develop a new mine, this isn't changing anytime soon. So it looks like we've entered a supercycle that is here to stay for a while. I think that this presents us with some nice opportunities, and even though the valuation of certain miners is already quite high, maybe even too high, there are still nice chances out there, not only with miners themselves, but also with adjacent industries. But please, as always, before investing, do your own research and only use this video as a starting point for your own analysis. That being said, thank you so much for watching, guys. If you did find today's video helpful, please smash the like button and subscribe to the channel in order not to miss my next video. And if you're looking for another company that might fit your long-term portfolio, this one might just be the right one.